Okay, welcome to my channel. So today's lesson will be focusing on cash flow statement, which is fall under indirect method. So today I'm going to teach you on how you should prepare the first notes of indirect method of cash flow statement, which called cash generated from operation. So I hope you will learn something. So please make sure that you have calculator on your hand so that we can work everything together. Okay, so on the required part they said we have to prepare cash flow statement for the year ended 31 August 2020. So on hint they said we also have to prepare cash generated from operation note. Alright, so here we have an answer book on how the format look like. So on the answer book, firstly we have been given cash generated from operation notes on indirect method. Alright, so firstly, before we go to cash flow statement, we have to get the balance of cash generated from operation. Why do we have to calculate this amount? You have to take note of this. So if you remember, uh, when we deal with cash flow statement, we are looking for cash in and cash out only. We deal with only cash item or item that have been paid cash. So if you check on our income statement, remember the profit that we have, it includes the amount which are not part of cash item. This is the reason why we have to recalculate cash generated from operation. So let's start. On our format, we firstly have to calculate the profit before tax. So how are we going to get a profit before tax? Of course, we have to check it on our income statement. Let's go back to our information that we have. We have income statement part and we also have balance part. So on income statement, if you check the last balance, we have been given the net profit after income tax. Is it the one that we are looking for? No, we are looking for before tax. So what do? We have been given the tax amount. We have been given the tax amount, which simply means that we have to take 438 and 130. Then we have to add back income tax. Why? Because we are looking for profit before they subtracted tax, which means that we have to add back our tax amount of 187 770. Then you will get amount of 625. You will get amount of 625 900. Then you will record it under profit before tax. Alright, now let's start with our adjustment. Why do we have adjustment? Now we are adding back what we subtracted on income statement, which were not cash item. Why? In other words, we are cancelling those amount so that we can be able to get the profit which include only cash item. Alright, so let's start with depreciation. Remember guys, if we are talking about depreciation, this is the loss of value of an asset. Did we pay anything for depreciation expense? No, we didn't pay anything. We just calculated the loss of value of assets, which means this is a non-cash item. So what do? Of course, we have to add back 320. Because why do we add is because on income statement it was subtracted. Is 320,000, 320,000. Alright, so now let's look at the impairment loss amount. Is it cash item? No, impairment loss is not cash item. We have to add back. What about the bad debts? We write off the debtors, which means that it's also non-cash item. Then let's look at the amount. It's 120 for impairment and 55,600 for bad debts. Then we have to add 500 and 120,000. Then we also have to add 55,600 for bad debts. Alright, so after that we have to determine the total. How did you get the total of operating profit before working capital? We say the profit before tax plus depreciation of 320 plus 120,000 plus 55,600. Then the amount will be 1,121,500. Okay, now we have to start with the working capital changes. Okay, the first one is trade receivable. Alright, so what are we looking for? In other words, we are looking for different is either increase or decrease, but you have to get the understanding on if it increase, what is the meaning, if it decrease, what is the meaning in terms of inflow and outflow. Alright, let's start with the trade receivable. In 2019, if you check, it was 614. Then in 2020, it was 490. Then, in other words, the amount has decreased to from 2019 to 2020. Simply means that the debtors has paid or has settled their debt. That's why this year we have few debtors, which means that in our side is inflow because the debtors paid cash and we receive it. Alright, now we have to get the different, then we write the positive amount. Okay, then a positive amount, it will be 490 minus 614, 300. Then the answer will be 124, 300 of inflow. It will be 124, 300 of inflow. Alright, now let's go to inventory part. Alright, under inventory, in 2019 it was 663, in 2020 it was 619. Simple means that the inventory has decreased. If the inventory has decreased, simply means that we sold the inventory. So now we have to determine the profit. We have to determine the different. So the different is 663, 300 minus 619,600. Then this different, it will be 43,700, which we will call it inflow because the inventory has been reduced. Simply means that we sold it to customer and customer paid us. Simple as that. Alright, then the amount of inventory will be 43,700. Alright, now let's go to the last one, which is change in trade payable. So under trade and payable, how do we compare? Alright, if you check the balance in 2019, we have the amount of 165 and 140. So in other words, in last year we were owing our suppliers 165, now we will owe them 140. In a different way simply means that we have settled the debt, which means that we paid. If we paid, money goes out, then the difference will be 25,000. The difference will be 25,000. This 25,000 we have to indicate it by a bracket. Why? Because money goes out. We paid our suppliers. Then after that you have to calculate the total. Then you will get cash generated from operation. Then the amount that you get, now we have to move it with it into cash flow statement. Then we're gonna have cash generated from operation. Now let's quickly go to income tax, the interest paid. So if we are talking about interest paid, we're simply talking about interest expense, which we were given of 86,100. So we paid simply means that is outflow, 86,100. Alright, then let's record our amount, which we have to represent by outflow, 86,100. Alright, now let's proceed to a dividends paid. Alright, so if we are talking about dividends paid, what you have to take notes, we will have the opening balance and closing balance and dividends that were declared in the current year. So let's read the hint together as a principle. Number 2, hint for dividends paid. Interim paid during the year is outflow. The one that we are going to be given on a transaction is outflow. You have to say minus. Then the opening balance declared in the previous year and paid on the following year is outflow as is paid on the current year. Simple as that. Okay, so the closing balance is outflow. It has not yet paid, it will be paid next year. In other words, on the closing balance is still inflow because we haven't paid our shareholders. We just declared the amount, which means that the opening, it must be outflow with the interim, but the closing you have to add it. Alright, let's check if we have interim. On the transaction number 1, interim dividends of 125 paid on 1 February 2019. Then on the opening balance for 2019 we have 120. Then the opening balance is outflow which means that it will be minus 120, then plus negative 125, then we add the closing balance of 168,000. Then dividends paid or dividends outflow, it will be 77,000. Then we will represent it as 77,000. Alright, let me go back. Okay, 77,000. 77,000. Alright, now let's go to income tax, which give lot of student challenge. So income tax, the rules, let's go to the rules first. If it's an asset at the beginning, that's an inflow. If it's an asset at the end, that's an outflow. Then if it's a liability at beginning, it's outflow. It's not like an asset where it is inflow at the beginning. Then if it's a liability at the end, that's an inflow. Alright, then the other rule that you have to understand is that you have to keep income tax from income statement as negative balance. So assets are represented by debit side, liability represented by a credit side. Alright, so let's check the balance that we have. If you check on the income statement, we have an amount of 187,770, which is an expense that you have to keep as a negative. Alright, then we have SARS income tax on our balance sheet, which is 2,400 at the beginning, which is an asset. If you check on the principle, they say an asset at the beginning, what do? It's an inflow. It's an inflow. In other words, we're gonna have positive 2,400, then minus the one from income statement of 187,770. Then the last one for the closing is 11,800, which is credit. Simple means that we have to check liability on closing date. Liability at the end is an inflow. Then, which means that we have to add the amount of 11,800. Then the total, we're gonna have an outflow of 173,570. Simple as that. So please make sure that you understand the rules when it comes to income tax, cause it give a lot of student problem. Then you will be good to go. Alright, so I think we are done with the first part. Then after that, please make sure that you do the totals. You have to do the totals, whether it's negative or positive. You have to make sure that you have done the totals. So now let's go to cash flow from investing activities. So on this one, we prepare non-current assets. We prepare non-current assets, which consist of PPE item and fixed deposit. Alright, let's check if we have a fixed deposit first. Yes, we have fixed deposit. In 2019, Our fixed deposit, it was 300,000. In 2020 it was 220,000. So fixed deposit has decreased, meaning that some of the amount has matured and goes to the bank, which means that is inflow on our side. The inflow of amount of 120,000, it will be inflow. Then we have to represent it by positive amount. Okay, we will represent it by positive amount 120,000. All right, now let's go to transaction. We have a transaction number 3, a fixed assets transaction. During the current year, old equipment was sold for cash at carrying amount of 324,000. So simply means that this is an inflow to us because we sold the vehicle and we receive what? We receive cash. Will be inflow 324. It will form part of proceed. It will form part of proceed. This is not purchase. It's called proceed or sale of PPE item. Okay, then the amount will be 324,000. Simple as that. Okay, so now we have a vehicle which was sold, and additional equipment and delivery vehicle were purchased. They didn't tell us the price. So what do we do? Alright, very simple. What you have to do, you have to say at the beginning we have carrying value of 6177. Then we have to add what has been purchased, which is an X because we don't know the value. Then the next step, we have to subtract the one that we sold, minus 324,000. Then we also have to subtract the dividends. We have to subtract the depreciation, minus 320,000. Okay, then after that we have to subtract the carrying value at the end, which is 4,975,000. Then we will get 558. This is the one that you will record under disposal of PPE item. Okay, alright, let me check and confirm. Alright, it will be purchase. Is the one that we purchase. Is not disposal. This is the one that we have purchased. So you have to do that calculation on your own. Alright, so after that, please make sure that you get the totals. Then the last activity is financing activities. Then firstly we have a loan, and secondly we have issue of shares. Alright, let's firstly go to the loan and check how are we going to adjust it. Alright, we have a loan from Absa Bank. Last year we owe 475 and this year we owe 954. So in this case, what happened? In other words, we go to the bank and borrow other money. We go to the bank and we borrow other money. That's why this year we have higher debt. So in other words, it's an inflow to us. Why? Because we receive money from upside. So you calculate the difference, then you record it as a what? As a proceed on loan. Simple as that. Then you calculate the difference, then you put it as a what? As an inflow amount. Alright. Then on the issue of share, last year we were 4.5 million shareholders and this year we are 5.2 million shareholders. In other words, we issued new shares to the shareholders. Now we have more shareholders, which simply means that we receive money from people who come in and invest. So it will be an inflow. So make sure that you calculate and get different from that one. Then from after that, you take the totals that you calculate in order for you to get the net cash. It will be either inflow or outflow. Then the amount of opening and closing is either you are given or you have to calculate one. Alright, let's take on this case. In this case, on cash and cash equivalent, we've been given only the opening balance. Then we don't have a what? A closing balance. Also, you have to check the issue of bank overdraft. If you check on the bank overdraft, what do we do? Bank overdraft simply means that we have a negative amount, which means that we have to firstly take 2,500 minus bank overdraft of 65,000. Then you will get the balance that you have to record as a what? As a opening balance. Simple as that. Alright. So I hope you learned something. So if you have a question, please make sure that you comment. I will respond each and every question that you have. So please make sure that you have subscribed to this channel. As a student of accounting, I will make sure that I posted a lesson that you will keep learning. So good luck. Thank you guys.